Welcome, everyone, to another exciting episode of the None of Our Businesses YouTube show and podcast. With me is Jack DiMatteo.
Hey, everybody.
And Charlie Zygmunt.
Hi, everybody.
I'm Ty Carr, and the three of us are accountants talking about the news and news that may be accounting, tax, business, other, all from our accountants' perspectives. This week, what we're talking about, Clorox sees the future differently. Tax pros want to delegate. Are mortgage rates increasing, and will that be affecting the housing market? What to do about lost Bitcoin? And could tax woes cause you to lose your passport? So all these exciting topics and our ever dynamic banter back and forth is on this episode. So join us, throw some comments down in the comments, or leave us a rating as you will. Give us a thumbs up, all that as you're watching this. Very much appreciated. Subscribe so you can see this and more. Let's get into it. We're going to start off with talking about Clorox. Jack, take it away.
Yeah, this week, start things off with an article talking about Clorox. They seem to be at odds with what Wall Street thinks. Wall Street is kind of betting that the coronavirus pandemic pandemonium is going to quiet down. There's going to be less of a need for the products that Clorox offers, the Lysols and things like that. Clorox is betting that it's going to be around for a while. But what I really thought was kind of interesting in the article was, could it have anything to do with the fact that Clorox jacked their marketing budget 30% to keep the idea that the pandemic was still around out there? So I'm not sure if it's a matter of Wall Street's right or Clorox is kind of doing all they can to keep the pandemic and disinfecting front and center. I thought that was kind of an interesting point to the article, but somebody's going to be right and somebody's going to be wrong. I kind of agree with Clorox in the short term. I don't think what you see, some of the precautions people are taking are going to disappear overnight. But I think, longer term, I mean, at some point, we're going to get back to what we call normal. But like I said, the gem I got out of that was the fact that they jacked their marketing budget to kind of maybe help the feeling of the public along a little bit. And was kind of wondering what you guys thought of the article.
Yeah, I think there's definitely some bias going on there. I think anybody who's super involved in selling disinfectant wipes thinks that that's going to be the future. And so I do think that's where that comes from. But at the same time, I agree with you in that those things aren't going to go away right once the pandemic stops. I also think it's going to take a long time before the pandemic is truly under control. Because obviously we're doing all the right things, but there's going to be flare-ups and there's going to be just a long window of time. And then just even after that, people are now kind of ingrained in that routine of being extra clean. And so I think it's going to take more time for them to kind of undo that. That's my take. What do you think, Ty?
Yeah, I think despite Clorox's conflict of interest in making this prophecy, I think it's I do agree that human behavior is hard to change. It's based on routines and fear, and when it comes to people being afraid and thinking, I think those human behaviors will take a while. I mean, even if the CDC and Dr. Fauci and everyone came out tomorrow and said, "Hey, everyone, we were wrong. You don't have to wash your hands," and I'm not saying they would ever say that here, but even if they did, people wouldn't believe it or people would ignore it, and they would continue doing that for years to come, probably, because I think that's kind of the human behavior. It would be like just in case, even if they kind of knew that Clorox wipes really weren't going to be that effective, if there was plenty of scientific evidence on that. And again, I'm not saying there is, but as a hypothetical, if there was, people would not. People would say, well, I'm just going to still do it just in case. And even I do that. Like, sometimes, like you think about like the supplement industry and people who sometimes you take those things and you're like, well, don't know if they actually work. Sometimes there's studies and things that kind of indicate that I might believe that say they don't necessarily do anything for me, but just in case they might, I'm just going to do it anyway. Right. And I think it's that kind of thing. So yeah, I think it's good to be bullish on anything related to disinfectant, cleaning, sanitation, and even PPE for a while after even the pandemic is called finished. I think it's find to be bullish on those things continuing on.
Well, and it's funny. I mean, it's with the pandemic. I mean, I've seen a couple of practices that when you think about it, it's like, wow, why weren't we doing this, 20 years ago? Like you'll go to a party and there'll be the individually racked, potato chips and Fritos and things like that. It's like, that probably always was a good idea at a party, but I don't know if anybody really thought of it in those terms. So, I'm sure there's going to be some things that will sustain even after the pandemic is, that everything dies down somewhat. Charlie, what do you have for us this week?
So I've got an article from Accounting Today called "The Jobs That Tax Pros Want to Delegate." And so this article takes a look at tax preparation firms and how they spend their time, and basically tries to determine whether or not the people are doing the things that they actually want to do, or where they're adding value, and how much of a tax professional's time is spent doing things that he either doesn't want to do or doesn't do as well as what somebody else might do. And so they give some examples in the article. They say that, for example, working with entrepreneurs is a good thing. You should keep doing that, but that you should ditch spending time on dunning, which is just basically getting paid on your invoices. That you should continue saving money for your clients. That's, of course, always a good thing, but that you should get rid of dealing with paper documents by using electronic means as wherever you can. And it gives a couple of other examples. But for me, the biggest thing is, I think I want to get your take, Ty, as having worked in a tax prep kind of role before, of how much do you think, I mean, you could look at this as them, as the tax professional spending their time doing things that they don't want to be doing. But I wonder how much of that really boils back down to client preparedness. And so I'm basically wondering if you feel that most of these extra tasks that are created are things that actually could have been avoided had the clients been more prepared when getting ready to file taxes, or if instead these things are just things that every tax firm has to deal with, and it really doesn't matter how prepared the client is. What do you think, Ty?
Well, I think that's a very interesting and excellent question, in the sense that, I think a lot of it does boil down to how prepared is the taxpayer, is the client, right? But on the flip side of that, I think that when you talk to tax professionals, and what they're wanting to have happen is they're wanting to have a super clean set of data that just comes into them. And then they do what? They shuffle it in, that clean data, into their software, which then prepares a tax return and lickety split. And maybe, I think what the article talked about a little bit, which would be kind of the ideal dream, is that you're providing service from the standpoint of your meeting with the client, you're keeping knowledgeable about their personal situation, about the situation of their business. Maybe you're helping identify places where they could find tax benefits or save tax dollars. I think that's all well and good, but from a practical standpoint, a lot of tax preparers, that sounds great, but from a lot of tax preparers say that they don't do that, or they don't do very much of that kind of higher level activity, because they're bogged down in these activities that you're describing, that are just kind of clerical or ministerial or hand-holding, that technically shouldn't be necessary. But I guess I have a very cynical view on that, in the sense that I kind of think, in most cases, tax firms that aren't providing the high level advice, probably revolves more around the fact that they aren't able to provide the high level advice, than it does that they're too bogged down in these activities. I do think getting bogged down in these activities is a real thing. I don't want to minimize that, but I also think that if you actually had the capability, you actually knew how to deliver the high level advice, and you were able to frame it in a way that clients valued getting the high level advice, you would be doing it and you'd be getting paid for it already. It's the fact that you have these low value activities in the way is not really what's preventing you on that front. And that's just my kind of cynical view on it. I think it's an excuse. I think it's an excuse used by tax preparation folks. And I'm not dogging the tax preparation folks. It's not used by all of them. And by the way, other accountants in our industry use similar excuses to not provide high level advice or high level consulting in whatever field they're in. The bookkeepers who say they would be CFOs if their clients didn't burden them with too much low level work, then they could be CFOs. No, they couldn't. That's not how this works. It's, if they actually had the capacity and the skill set to provide CFO advice, and they were actually able to provide a perception that that advice was valuable, people would buy that. And by the way, people would buy that, and they may or may not even have to be involved in the lower level activities. The reason that people are doing these lower level activities is because that's the value proposition that the market is seeing from them. So I think that it's not a thing that's in your way. It is a thing that you've allowed to become the perception of what your value proposition is. And you need to work on that issue. If you don't want that to be the case, or you need to have self-awareness and be honest with yourself as to whether that really is your value proposition. Because here's the thing, is that when it comes to straight tax prep, if we take this discussion back into the tax prep world, right? If there isn't much actual advice to do, which there may not be, a lot of tax prep may really just revolve around the compliance issue, right? Then that brings me back to where I was going originally. It's like, well, what you're saying you want this clean data stream that you can just throw into your software, and then and then most of that software is automated. If you have a clean data stream, it's going to produce an answer that's probably right 80 to 90% of the time. And away you go. I mean, and then you charge a fee for that. Wouldn't we all want that, right? Wouldn't we all want that? But we get paid for doing complex, difficult, dirty work. That's what we get paid. That's what people actually get paid for in real life. So it's not, it makes me think of the guy, maybe you guys know his name, but he does that show, Dirty Jobs. I think accountants struggle with this exact issue, right? Is that they always want to be on the far white collar end of what the work is, and they discount what the blue collar in the trenches work is to do. And the reality, there is money to be made in the hand holding and in dealing with the stuff that you think maybe shouldn't need to be done, but still needs to be done. And at the end of the day, that's what a lot of clients are actually paying for. That is what they're actually valuing. If you actually take a hard look at what's going on in your practice or what's going on in the industry there. So those are some of my thoughts on it. I also want to reflect on this, kind of related to this, but also the article. One of the things I thought was amusing about the article in relation to what I'm talking, the question you asked, Charlie, and what I'm answering here, is that the article says things I'd like to delegate, but a lot of the stuff on that list is just things that they would like to go away. Like they're not like, how could I figure out to delegate this to my assistant? That's not like the context of the things they're complaining about. They're basically creating a laundry list of things that they think really just either shouldn't exist at all, or it could be automated by technology or whatever, right? And so I thought that was kind of an interesting point with it. It's like they sidestepped the whole question of, could they actually delegate some of the work that exists to someone else and then do higher level activity themselves? And they're still, and that kind of inspires the question that you asked, Charlie, and my answer, because it is well rooted in this kind of thought process that our industry has been in, that, oh, I'm not doing higher level consulting because I've been burdened with too much lower level work. And my cynical answer to that is, if you're burdened with too much low level work, it's because of how you framed your value to the market.
Well, it's funny. I mean, Ty, I believe you said this, but I'm of the same opinion. And when, looking at this article, that's the gig you signed up for. If you're going to sit there and bang out 1040s all year, people are going to come to you with the shoebox. And if that's not the kind of work you want to do, then get out of it. I guess the other side of that would be, okay, you could hire an assistant and have them sift through the shoebox, but don't come complaining that, the cost of preparation is so high because you have to hire somebody to shift through that shoebox. You could also say, if you want to be that big of a prima donna and you don't want to deal with those kind of returns, then stay out of that. And you want to charge accordingly. I mean, even a high net worth client is probably not going to come to you with clean data that you can just upload in a system and produce a tax return. So, if you're going to get into tax preparation work, this is the gig you signed up for. You're going to have to, sift through people's shoebox, put some kind of organizational data, ask some questions. If you think you can hire a lower level person to maybe prep some of that stuff because you find it, beneath you, whatever the case may be. I think a lot of people kind of run into this too, that have had corporate level jobs. They leave corporate America, they get downsized out of corporate America, and they go work with, Main Street Americans, some of these small family businesses, and they're scratching their head at some of the things that they encounter. But they're bringing you in there because they don't know any better. I mean, you need to educate them. You need to streamline those processes. But when you're a tax preparer, the majority of your work is going to be B2C work, and the consumer is not going to learn the tax code and organize their tax records to make your job easier. So if you find it distasteful or beneath you, my suggestion would be maybe you need to find another line of work.
Yeah, I think that's a great point. And the only thing I just want to add is that if you want to live in this dream world where this data stream exists that people can put in their info and a tax return just comes out, the good news is we have that. It's called TurboTax. And the people who chose to use that. And then the target of this article is for everybody who couldn't, for whatever reason, didn't fit into that category. So I think we're already there. And just to kind of tie up loose ends, I looked up the name of that show. It was Mike Rowe was the name of the host of Dirty Jobs. And all right, do you have another article we can talk about, Jack?
Yeah, I think this one's going to spark quite a bit of interest. They're talking about the housing market, and they're talking about how in the last 3 weeks the mortgage rates have ticked up, which they're still so historically low. I don't really think that it really matters. And they're asking if the tick up in the mortgage rates is going to be what tanks the housing market. Again, like I said, I think a lot of these things are cyclical, seasonal, if you will. We are coming into the home buying season, so it would stand to reason that rates are probably going to tick up a little bit. But when you look at them from a historical perspective, they're still very low. So, I look at the bigger issue, which is the inventory, which there's just such a mismatch between the amount of inventory on the market and the amount of buyers who are in the market. I'm hearing stories from realtors every week where there's actually something now called the pre-listing, where they announce that they're going to be listing the house. People come and look at it, and on day one they have 15 offers, usually above ask. People are foregoing housing inspections because they don't want to get kicked out. They don't want their offer to get kicked away. It's so I think the housing market is white hot. I think a couple of basis points, rise in the interest rates, I just think it's a blip on the radar screen. But I think, kind of in the bigger context, I was having a conversation with another financial professional this week, and he said he'd heard an old quote where if you could predict interest rates, you'd be a rich man. I just look at the amount of debt that we have, and you kind of go back a few years when they talked about normalizing interest rates. And I think we did a couple of rate increases about halfway through Trump's administration, and the market threw a fit and the economy threw a fit. So I just look at the amount of debt that we've rung up. Heaven help us if we normalize interest rates anytime soon, because that'll suck up everything that we've got in the budget. So, I mean, I guess, sticking it back to the article, I really don't see a couple ticks up in the basis points really slowing down a white hot real estate market. But I think if you look at it in the grander scheme of things, what do you guys think? Do you think there's any chance of interest rates going up significantly anytime soon?
I would say that if we're in a market where people are considering buying homes without inspections, which to me is just crazy, then I think that I'm with you. Basically, there's no nominal change in the interest rate that's going to affect people who are of that mindset, because on the table, for me, that's such a ridiculous maneuver that, I don't think those people are thinking interest rates when they do that. But yeah, I've got to agree with you. I think we've got a inventory supply and demand issue, and that I don't see that really turning the table anytime soon. A couple of changes in the interest rate aren't going to be enough to reverse that. What do you think, Ty?
Yeah, I mean, if we're talking about the effect of interest rates on home buying, I think it depends on who the buyers are that are creating the market, so to speak, because and I'd be interested, there's probably data out about this, and I would ask our viewers or anyone, if you know about this, maybe put something in the comments for us to look at, because what I wonder is what the relative effect of interest rates on home buying is versus down payment standards. Because the thing, I've done a little bit of real estate investing myself, and one of the kind of looking at how different things affect things, it's occurred to me in the past that when the banks are not requiring, they're not sticking to a higher standard for the amount of down payment, that you've got more first-time home buyers out there. And I think, and I do think that was one of the things that I don't approve of, I suppose, and or concerns me. Let me say it that way. One of the things that concerns me is that I think we know that was the lax of standards and down payments was one of the precipitating issues with the housing crisis back in the mortgage crisis and the economic fallout in 2007-8 era, right? And I remember that after that there was this big kind of thing about, oh, we're not going to do that again. Well, because back in that day, even I did it too. I mean, I remember back the first house that I bought to live in, a condo, we bought with no money down at all. And we were able to do that back in the day. And so I remember after the whole kind of 2007, 2008 economic debacle, that there was this whole thing about, oh, we'll never do that again. I guess we now know why we have to have standards about down payments and stuff like that. But sure enough, it wasn't a few years later that I think they started doing 10% down only for first-time home buyers if you through Fannie Mae and stuff like. So they always kind of circle back. The industry and regulators and everyone always circles back to the same game plan and so anyway, I think maybe that's a tangent. It is a tangent. Not maybe, it for sure is a tangent. But that phenomena concerns me. But I think about it in this context. It's like, well, if rates are going up, investors who might invest in real estate and have sophisticated cash flow modeling are probably watching that issue and maybe thinking, oh, well, this is not a good time to buy, right? Because rates are higher, or our payment on these houses are going to be higher. But I wonder how much that actually affects this broader market of first-time home buyers, or home buyers that the broader market of just personal home buyers buying personal residences and are doing so with lower down payments, particularly if the only way they're able to do so is with lower down payments. Are they really looking at the long-term effect of having a higher interest rate? That's kind of the nature of what's rolling through my mind here. My guess is probably not. But like I said, maybe some of our viewers have data on this point about what the relative effect of lower down payments versus raising interest rates might be on the housing market. So, and that goes back to my main thing, which is it depends on what's causing the market to be higher. Is it investors? Is it in the real estate market, or is it actual home buyers? And so, yeah, my sense is, and on the investor side, this is the puzzle piece I haven't ever quite figured out, is what's the relationship between rising interest rates and rising rents? Just, we know rising interest rates increases the cost of living and the housing costs for home buyers. You would think in a perfect market where everything reconciles to everything, you would think it probably works its way into increasing rents for renters as well. If that's so, then on the investor side, how sensitive are they really to rising interest rates if they're ultimately able to pass it on to renters in rents, right? So I don't know, and I suspect the market is not perfect in that regard, that there is some weird arbitrage or discrepancy that occurs there that can affect the market. That is, that if the interest rates are rising but rents are not, I think your investor group is probably not going to be buying as much, because they can't, that it's cutting into their returns to not be getting higher rents when they have to pay more interest. And that's from the business side, how the investor class looks at it. But again, all this, I mean, it's dependent on how much of this market, of this white hot market, is dependent on the investors versus the actual residents, the actual people buying personal residences. Because I think the way they think is just different.
It's funny. I'll raise your zero down payment down. And I remember the very first house I bought in the early 90s was I can't remember. It was a minimal down payment, but it was a negative points loan. It was through VA. So they actually ended up paying me $400 to go in the house. So it's kind of interesting, though. Some of the other things I'm hearing from that, and I don't think it's got anything to do with investors, because I've flipped about 30 houses. I talk to investors. They can't seem to find anything. I think it just stems from the fact that there is just so little inventory out there. And, I'm hearing things like earnest money has gone up. It used to be maybe $1,000, it's $5,000. The other phenomenon, to your point with the interest rates, is what I'm hearing is homeowners are coming in there with cash offers on $300,000+ houses. So it's people are really putting their best foot forward, because if they don't come up shooting on that first offer, they're not going to get that house. So again, I think we talked about it last week or the week before about, this moratorium on being able to push out renters and people who have mortgages. At some point, like I say, I think that bow is going to break. I don't know how much we're pushing this down the road, but at some point there has to be some equilibrium between, qualified buyers and what's on the market. And I don't think we're anywhere close to that right now. Charlie, what else do you have something else for us this week?
Sure. I have another article we can talk about from the New York Times called "Lost Passwords Lock Millionaires Out of Their Bitcoin Fortunes." And so isn't that great? I love this. We're looking at, basically people want to get away from all these governmental currencies and they want to innovate and do all these new different things. But there are some challenges to that can make it tricky. And so the article looks at a guy named Stephen Thomas, who was a German programmer. And what he did is he made, in the early days of Bitcoin, he made this video called "What is Bitcoin?" And it basically explained the idea of Bitcoin. And it got so popular that somebody gifted him 7,000 Bitcoin. Now, over time, that amount, back then, that was not a huge amount of money, but over time, that basically grew with the other Bitcoin that he had to a total of $220 million. So this guy's doing good. He loves Bitcoin. He's making these videos. He sets up a security measure that has a passkey device that he basically uses to log in and look at his Bitcoin fortune. And he writes the password to that device down on a piece of paper and then proceeds to lose the piece of paper. Now, the way that this device works is it gives you 10 tries to guess what the password is. And if you can't, then it encrypts the contents forever and renders the whole thing useless, locking this person out of his fortune. And so he's guessed 8 times. He then worried about it for many, a long time, and then went to New York Times, got this article going. And so it's just one of these interesting problems and one of the challenges of trying to get away from traditional currency. The article gives a few more examples. It's kind of a recurring thing that has happened to a couple of different people. Apparently, the thing that they're doing is that when they get locked out, they're taking the hard drive and then they're storing it off-site because they know it's worth a lot, but they also don't want to look at it every day as this constant reminder of the 220 million that they have that they can't get to. And so I just think it's kind of this really interesting problem that Bitcoin investors are being faced with. And it's interesting because even some of the most sophisticated investors are falling prey to the same issue. And the article cites a study that was done that said that 20% of Bitcoin has gone idle. So basically 20% of that is just sitting there and it's not clear if the owner is actually able to access that fortune. And so I want to get you guys' take on, I guess what it boils down to is the challenge of being your own bank greater than all of the negativity that comes with trying to use governmental currency and all of the interference that comes with you trying to just live within a normal currency? Or are people, going out of their way to set up this alternative way of doing things and finding out that actually it's just as annoying as all the challenges you had when you had banks and governments interfering? So what do you guys think on that issue?
What an excellent question. And how often do we see this with businesses and in an accounting context of people kind of setting up alternative ways to do things in an attempt to be different or simplify, but in fact, they just actually make their lives and everything a lot more complicated than it needs to be, right? And so yeah, I mean, it does definitely sound like that think that's what often happens is, and also people get complicated. They get fancy because they think they're going to hit the jackpot, that they're gonna have they're going to be the guy that has the $220 million, and they're trying to figure out how to best manage something like that, when most people aren't that guy, right? And so a lot of times people are going to a lot of extraneous complication on the theory that they might be that guy when they never are, and so the costs definitely outweigh the benefits. But I just have to say, I just thinking about the idea of having $220 million that I basically had, and then I won such a huge benefit in my life in that way, or I have such a huge benefit to my life in that way, and then I can't get it because of something like losing the password. I can't fathom. I think that would wreck me mentally. I would be in the asylum when that happened. I just don't know what I would do in that situation. It sounds so epically tragic. And you could say, oh, well, it's just money. But I mean, $220 million, you would be living such a different life than the life that I have, or probably most people have, that, the fact that you just like miss out on that opportunity because of something as mundane as losing a password. I don't know if I could ever get over that. Wow.
Well, almost, I mean, my God, I mean, we're only as good as the passwords we remember. I guess everybody's still not using password manager as long as it's been out there. I know I've got a spreadsheet full of passwords, but anyways, yeah, I the same way. I mean, something about that doesn't quite seem right. Just because you can't remember a password and you fail 10 times, you're out 220 million. Something there doesn't quite add up. If that was the risk, I'm kind of with you on that one, Ty. If that's the risk, I don't think I want anything to do with that. There's other ways to invest. There's other avenues that I can go through. But like I say, that seems a little bit harsh. But I guess it all comes back to all the stories we hear when we talk about passwords. But if I would have to think there's got to be some recourse to get you $220 million out of there, or otherwise, why the hell is anybody investing in Bitcoin? But that's just, I mean, and again, if that's a currency you want to grow, these aren't the lead stories you want to do to get people to invest in it. I don't know. What do you think, Charlie?
Well, I just wanted to not to defend Bitcoin at all, but just to be clear, in the article, the guy had set up an extra security measure, which he was trying to make better. So in other words, this 10 try feature before you get locked out is not a Bitcoin feature. He had a system called Iron Key, which and it's basically like a token, and but it's the same issue that you're saying, which is like ultimately he put all his trust into that system, and that's where the 10 lock is. And so I'm with you 100%. I can't even imagine being in that scenario, and I would hate to be the guy who not only is in that scenario but also went out of his way to buy this extra system called Iron Key so that he wouldn't be in a scenario like this, and yet here he is. So yeah, I just thought that was really interesting. Do you have another article we can talk about, Ty?
Yes, I do. Yeah, this is, I won't be able to necessarily point our audience to the article because it comes through a subscription service in Thomson Reuters that I look at for various tax things. But the topic, which was interesting to me because it brought up something that I was not aware of, or that I had forgotten that existed. But the topic is that the IRS resumed their delinquent debt passport certification program. So apparently there's this program where the IRS will certify for the taxpayers who are quote unquote seriously delinquent in tax debt. And I don't know what the threshold for that is, or what that means, or if it's judgment on the side of the IRS, what seriously delinquent means. But if a taxpayer is seriously delinquent in tax debt, there's a program where the IRS certifies to the State Department that taxpayer should not have a passport. And then the State Department will not issue a passport to that taxpayer, or will revoke it from the taxpayer if they already have one. So yeah, I just thought it was of interest to me. The reason this kind of came out in the tax news was because the IRS had put this program on pause, I guess, because of the pandemic, and then is kind of announcing to the world, hey, everybody, we're restarting this program again. So they're going to be doing it, and they call it certifying that debt of taxpayers to the State Department. But in short, what that means is the IRS goes and tells the State Department that somebody owes too much tax, and so they can't have a passport. And the idea that you could lose your passport because of your tax debt, I didn't really contemplate that. Interesting to me. So thought I'd raise that and hear what you guys think. Did you know that? Is that fair? Sound crazy? Any off the cuff thoughts about that issue?
It's funny. It's funny that you say that because my wife and I will watch all these tax all these tax saviors out there. The underlying issue to it all is, guess what? You're in trouble because you didn't pay your taxes. I don't really feel sorry for somebody that didn't pay their taxes and they can't get a passport. At the end of the day, all of us pay our taxes. That's what we're on the hook for. That's your responsibility as a citizen, to pay your taxes. So if you get in trouble for not paying your taxes and you can't get a passport, but I mean, you hear all these stories on there and they're like, I had $72,000 and I got it knocked down to $14,000. Well, thank you, taxpayers, because we picked up the tab on the 56 that you owed. It's not that you didn't owe that. You didn't pay that. You got yourself great representation and you got the bill knocked down. But I mean, why the rest of us would be gleeful that somebody else was able to knock down their IRS tax bill? Guess what? That raises the taxes on all of us because somebody's got to cover that. So the fact that the IRS I'm surprised they don't have more tools and checks and balances and things like this in place, to catch the people that are behind, the deadbeat dads that don't pay child support and things like that. So as far as I'm concerned, hey, I pay my taxes. They can institute any program that they want to catch some of these deadbeats, because unfortunately the rest of us who are abiding by the rules are paying for them. And I would be completely remiss if I didn't point out the fact that you've got some of the finest whiskey in the land behind you from Westward Whiskey, don't you? Don't you, Ty Carr?
That's right, I do. Absolutely. I keep it right back here because I love the stuff and I drink it before and during the podcast and after too.
And all you viewers out there, grab yourself a bottle or two.
Yeah, I think you guys are right on this issue. I think if you go to the store and you get caught stealing, you don't get to come back and shop on aisle 9 because you might need some bread or something, right? That's not how that works. Let's not forget that Al Capone went down for tax evasion. They put him in jail. So we can talk about losing your passport as a result of that and kind of the loss of freedom that can come along with, defrauding the system in some way or not paying what you're supposed to pay. But I think there's levels to it, and this seems like one that's within reason. Ultimately, taxes are part of buying into a system called the state, and so if you don't want to be part of that system, okay, don't pay taxes, but then don't use anything that comes from the state, like the border or anything else. That's a choice that you make. And so, yeah, as somebody who works hard to pay their taxes, I have no sympathy for people who don't. And yeah, that's my thoughts. All right, everybody, that's been our show. Thanks for watching and listening to the None of Our Businesses YouTube show and podcast. Tune back in again next week for more business updates from an accountant's perspective. And please do check out our sister show, Profitless on Purpose, the not-for-profit podcast for anyone interested in that topic. Thank you. Bye.
Bye, Ron.